Victoria might be making the biggest mistake in over 30 years. It's about to change its rental laws. In this episode, I'll be taking us through what laws are changing by Dan Andrews. I'll be taking us through 6 charts on why, and this is not popular, actually rents are not really an issue in Victoria as much as people make it out to be. I'll also be sharing you with the consequences of these changes on Melbourne and the Victorian property market. And at the end of the video, stay tuned. I'll be taking us through suburb by suburb, some of the best areas to buy in Melbourne on a map and why, and some of the worst areas that you're probably being conned into purchasing in right now. Let's go. My name's PK and I help people build passive income through the Property Investment Accelerator using data without needing a $15,000 buyer's agent every single time. His channel, we talk property, economy, and financial happiness. Give it a subscribe, give that notification bell a hit, and give it a thumbs up too. Let's go. So this is what Dan the man is saying. Housing crisis, rent freeze raises risk of 200,000 plus home sales as landlords evict themselves from the Victorian market. A 2-year rent freeze could be the final straw in a Victorian landlord exodus that would lead to the sale of more than 212,000 properties in Victoria. Mr. Andrews confirmed on Sunday his government is working on a housing package that is expected to allow landlords to lift rent only once every 2 years, and even then potentially impose caps on that rent increase. So it might be like you raise it in 2 years time, and even then you can only raise it like by 1% or 3% or 5%. He's also going to add like $5 a booking penalty on Airbnbs and short stays. But let's just focus on this rent cap. You know, they actually did this in Germany, in Berlin. They did it at the start of 2020, and what they did was a 5-year rental freeze. But just a year in, they actually had to repeal that act because they found that there was a 60% decrease in rental listings. What that means is investors just were like, no, we're just keeping it empty. They weren't even selling. They were just keeping these houses empty because they knew this wouldn't last. And who suffered the most? It's renters. Now, I'm not a capitalistic pig saying that we don't care about renters. We absolutely care about renters, but we should create policy that actually is attuned to the real issue. Now, in these following 6 or 7 charts, I'll take us through why the rental crisis is not really a rental crisis in the way that you might know it, and what this policy could actually do to house prices. So this is from the Real Estate Association of Australia. Check this out. What we're seeing is housing affordability in the yellow, so the percentage or proportion of yearly or monthly income it takes to pay your mortgage, and then rental affordability. Obviously, this is focused, these rental caps are focused on renters, so let's just focus on the green. Victoria actually has the highest rental affordability across any other state, yet they are the ones imposing the most draconian laws on property investors in the favor, so-called, of renters than any other state. Is this politics? Is this the Labour government, state Labour government, really playing to its voter base? Or is this prudent economic policy? You be the judge of that. In fact, this chart is going to be super unpopular. All credit goes to Longview for producing it. What it's just showing is in this dark black line is Australian rental cost index. So, you know, how much rents have gone up over time since 1994. And then in this kind of dark blue, you've got median weekly earnings from people, okay, how much incomes have gone up, and then you've got in the light blue maximum weekly earnings for pensioners. And what this is showing, like, completely, you know, punches you in the face because it's against everything that the media is showing right now. And some of it might be true. It's showing that the rental increases since 1994, this black line, yep, it's gone up, but the median weekly earnings have actually gone up at the same rate by and large, okay? In fact, rents, yep, they did go up a little bit more between, let's say, 2006 to about 2018, but since 2020, according to this, median weekly earnings have actually gone up at a higher clip than rents. So are we really in a rental affordability crisis? I don't want to take that away from anyone who's struggling to pay rent. You know, this is not like a true in all situations. This is a generalization, but that is what data sometimes is. It's an aggregated view of, is this problem really as bad as people make it out to be on the ground floor. And these policies like rent caps, they aim to target all property investors, and they're supposedly meant to favor and pick up from the doldrums of financial despair all renters. But check this out once again from Longview, terrific analysis. What it shows is rent as a proportion of disposable income for both low income earners and everyone else. So look at everyone else. This is the distribution curve, the dark, okay, other households. What this is showing is that generally at the apex of this curve, people who are making not low incomes but average to high incomes, they're paying only around 20% of their household income in rent. If the affordability threshold, as generally and globally accepted, is around 30 to 35 or maybe even 40%, then this is very affordable, right? And of course, this is a distribution, so some go all the way up to here, but that's in any normal distribution or bell curve. What is concerning is the low income thresholds is a little bit on the right hand side, but even still the apex of that curve is around 30%. I don't like it that it's skewed to the right, which means that yes, a lot of low income households are struggling, but still it's not like up at 50%, it's not up at 40%. The apex, the average person is paying around 30%. So if this is true for Victoria as well, then why are we making laws that favor all renters, even those who are like, oh, this rent's not even that much to me because I'm a high income earner, and also making all property investors suffer? It doesn't seem equitable, it doesn't seem fair. What they could do, and I'm not a seasoned or career politician like Dan Andrews, is be a little bit more prescriptive, a little bit more clinical in how they solve the problem. The problem needs solving, but not in a broad brush, blunt instrument approach to help everyone, even those that don't need helping. Because if they do this, if they do put a rental cap on, guess what? There will be even less property investors. Property investors don't want to invest where you can't raise rents. I mean, we're doing this for passive income, trying to create a win-win situation. Already building approvals are going down, all right, for total houses and multi-units. Check it out. So what will happen is supply will dry up even more. This blue line, this red line will go all the way down, 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 down. And so what will happen in 1 year's, 2 years' time, 3 years' time is that even though investors have pulled out in the short term, house prices might drop a little bit in Melbourne and Victoria. Over the medium and long term, there just won't be any supply, right? And those investment properties that do stay, at some point that pressure will build up. Adam Smith's invisible hand, long-term equilibrium will be sought, and the government might change, or there might be social upheaval, and then rents will go so high back to their equilibrium level, and at that point there'll be no supply in the market and house prices will go through the roof, rents will go through the roof, and that's a really bad outcome. We should go for something that's measured, not a rubber band effect where you pull things back artificially only for them to pop and completely destroy renters in the future. That was building approvals. This is residential construction. So even those houses that are approved, a lot of them aren't even getting off the ground, right? Residential construction has fallen off a cliff in terms of approved rolling 3-month average sum, and even completions has trended downward consistently. This is from AMP and Macrobound. So there is no denying that, of course, in the short term, those of you who own property in Victoria, including me, there might be a little bit of a soft period, but medium to long term, I'm talking like 3 to 5 years, house prices will go up even more because of this policy. Rents will go up even more because of this policy, because of that rubber band effect. And I think in the short term, it will actually hurt renters as well. Even though their rents won't go high because of an artificial rent freeze, there just won't be enough investment properties for them. Check this out once again by Longview. This is a really interesting chart. What it shows is that the vast majority of houses in Australia, both from a number of houses perspective as well as a value of houses perspective, are owner occupied. Okay, all good. Then the rental market is comprised of private rentals, in other words, you and me, property investors providing rental properties to tenants, and then public and social. This public and social is like nothing. It's almost non-existent. In fact, it's trending down over the last 20 years in Australia. The government just isn't building any. And I know they're creating this like fund and all this stuff. The government doesn't have any builders. The government doesn't have contractors. They need private builders, private contractors to build these things. Meanwhile, all these construction companies are going bust or have too much work that they can't handle. So where's the supply coming from? Definitely not the public and social side of things. And if you reduce this private rental, then like where are the rental properties for all these renters to buy, especially with 1 million people coming into Australia? Owner occupiers certainly won't sell them because a supply shortage means house prices go up. And certainly house prices aren't going to come down by 20-30% in the short term, regardless of this policy. So it's not like those marginal renters that might be able to afford a property would now be able to afford a property. Like that's not how it works. I know that's the classic argument of socialists, but that is not how it works. Prices, even if they come down 10%, just like they have done in Sydney and Melbourne in 2022, that hasn't meant that a whole influx of renters have been able to get onto the property ladder. 10% isn't often the game changer for them. Now let's analyze where you might want to capitalize on this opportunity or where you might struggle the most with these changes. Let's look at suburb by suburb core logic mapping the market. This is Melbourne here. The darker the purple, the more expensive the area. So clearly inner east side and south areas like here are most expensive, and then as you go naturally you go out west, it's cheaper, etc, etc. Not terribly useful for us. Let's go now to the 3-month value change. What you're seeing here is that the more premium end of the market, just like in any cycle, the more premium, the more expensive properties go up first, but that doesn't mean that they go up the most. They go up first, and then the medium properties go up, and then the inexpensive properties go up. And then in a downturn, the more expensive properties come down, the first and the most, and then the medium, and then the inexpensive one. So this is just a kind of an indicator of Melbourne's most recent change in cycle. So it's no longer in a downturn, it's on its next growth cycle. How shallow or steep that will be remains to be seen, but you can see from the vestiges of the last downturn, the inexpensive areas are still kind of going down a little bit, like Melton, etc. But then these more premium areas have well and truly started to go up, indicating a new growth cycle in Melbourne. And we know this because if we look at the 12-month change, which is here right now, everything is dark. Everything is dark red, which means that everything fell, which was everything, we knew that. Melbourne, Sydney, it was all like this in 2022. So the fact that these more expensive areas have started to rise in the last 3 months indicates that new cycle. But this is what I was warning of in late 2021, at the start of 2022. I kept producing so many videos after videos after videos saying, don't invest right now in Melbourne, Sydney, don't invest in Melbourne, Sydney. And this is why it doesn't matter if you're buying in Tarneit, something inexpensive, although really terrible, or you were buying in like St Kilda or Hawthorn or whatever. This did not mean that you made money in Melbourne. And I just want to make the point as well, like not that I'm in favor of buying in Werribee or anything like that down here, but Werribee over the last 10 years has produced more growth than even expensive premium blue chip aspirational areas like St Kilda, like Toorak, like Hawthorn, etc, etc. So if anyone who tells you more expensive areas grow more over the long term, it's just not true. You could have bought inexpensive, not that Werribee is ever my preference, and made just the same gains whilst having better cash flow. But you can see, just for those of you who don't know context, and even if we go down to Geelong, everything went down. Right now, I'm a little bit more bullish on Geelong than I am on Melbourne, especially because I like to buy higher yielding, higher cash flow properties, sub 500, 600, 700K. But in the last 3 months, like I said, it's these western areas that still provide the worst investment options. I know that there's so many communities over here that will try to sell you a property because of the whole, like cheap and infrastructure expanding, rail line, etc. But all of that is almost like in limbo now with the state budget in deficit. They've got no money. They cancelled the Commonwealth Games. And these areas, the vacancy was very high just a year and a half ago. The rental crisis kicked in and therefore vacancy went down below 1.5%, but now it's edging upwards. And probably in a year or 2 years' time, vacancy in some of these areas like Tarneit, Hoppers Crossing, out to Melton, Caroline Springs will go above 2.5, maybe even 3%, representing a really terrible investment choice. So So remember, we need that vacancy to be low, we need cash flow, we need tenants, not just capital growth. And if I go back to the current median value, I know this is not Melbourne, so forgive me, but some of the best picks that I have personally is places like Corio, Norlane, traditionally highly stigmatized suburbs, lower socioeconomic, but now with this kind of urban sprawl, even going out along Geelong all the way up to Melbourne, really, these areas are relatively close to the CBD, quote unquote, of Geelong. They're still more cheaper or less expensive than surrounding suburbs, as you can see here in the lighter purple, and prices have been going up in the last 3 months. Yields are not terrific. They're sort of sub 5%. So, I would not advise any of my clients to buy here if they had 500,000, 600, 700, 800K to spend. But for those of you who really do want to buy something in Victoria, I think areas like this are a much better bet than some of these western suburbs. I won't really comment on a lot of these areas because probably those people who are watching, this YouTube video right now are not buying for $3 million or anything like that. But nonetheless, some of these areas up here have some tremendous opportunity, especially around Mill Park and South Morang. Going in this kind of, I would say, northern or even northeastern corridor, the commute times are not too bad, relatively speaking. There's not a huge amount of development going on here compared to some other areas around Melbourne. But maybe for owner-occupiers, you might take these comments and add them to your arsenal of information. Let's look at the rent though, like the median rent right now in Melbourne clearly is high where house prices are high, but the 12-month change, if you compare this to Sydney or Brisbane or Perth or Adelaide, it doesn't compare. These boxes, these suburbs are nowhere near as dark as they are in these other capital cities, yet you've got Dan the Man doing the most out of any state in terms of curbing rent increases and penalizing property investors. You can see the rent rises haven't been isolated to those quote unquote blue chip areas. They're kind of haphazardly, this area over here has had a huge increase. Around Brunswick West has had a huge increase in rent. Even these areas that I'm not a huge fan of, like Tarneet, have had higher increases than some of these more premium areas like Heathmont or Mitcham or Ringwood, etc., etc. So I just want to make the point that markets within markets, it's not that rents have gone up everywhere. And if you're living in Gisborne or Sunbury or Beveridge up here, or even like around Epping or these areas, you might wonder what this whole rental issue is about, because rents, yes, they've risen, but they've risen like 5, 10, 15% in the last couple of years. Nothing like overly dramatic. In conclusion, I think the property market has just started a growth cycle in Melbourne, in parts of Geelong, not really regional Victoria, generally speaking, to be honest with you. I think these rent caps, if they do come in, if this rent freeze, if it does get legislated, it will mean that this price pressure actually counterintuitively in perhaps 12 to 18 months builds up further and further as supply just gets sucked out of the market. Property markets work on supply and demand. Property markets don't work on what interest rates are doing. They don't work based on what a politician wants to happen. They don't work based on arbitrary tax laws. They work and go up and down based on multi-dimensional factors, both on the demand and supply side. With rent caps and rent freezes occurring, sure, rents will stabilize. A lot of landlords will be pissed off, but supply will be drained from the market. In the medium term, house prices will go up, and when government changes and these policies are augmented, that's when that rubber band will just bounce back, rents go up again to where water finds its mark, and so will house prices. With over 500,000 people coming into Australia, a lot of them to Victoria, I just don't see how I can be wrong, but tell me if I'm wrong, leave it in the comments. I have nothing against renters, I'm just trying to share data in an objective way. My name's PK, hit the subscribe button, hit the like button, and I'll see you next time. See you later.